And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. We got a full crew here today. As always, we welcome Frank in for Friday Fun Day. Mark, I even saw that you writing the Friday feature today. You're talking about some music and dancing in your office. Got to keep positive attitude in these times. Let's start with Frank. How are you doing, sir?
Doing great. Thank you very much. Always a pleasure to be here. Hope the halftime crew is being safe, trading smart out there, but an interesting market that we have. And Mark and I were talking a little bit about a pinch on the S&P. I'm looking forward to sharing that with the team here somewhere today.
Yeah, I agree. Noah, if you can, I think you are screen sharing. Let's start with you and let's break this market down technically a little bit here. I saw one of the most ridiculous headlines I've ever seen in my life saying that we're in a new bull market just simply because we went up 20% from bottom to top here. Whatever that is, they need to change the definition, Matt. I would tend to argue that you can, in any stretch of any form of any imagination, you cannot call this a bull market just because the market went up for 3 days. So get that out of our mind here in the short term. But Noah, break this down technically. We're at 2544 on the S&P. We've had a lot of back and forth over the last couple of weeks. What are you seeing on a technical perspective?
Well, I think this is what we would refer to as a bull trap, Tim. A bullish, bearish retracement. So all the downward momentum we're all familiar with. We've seen the rally back up here on 3 solid days up, and then here on a Friday. Not surprised to see some profit taking. And I don't have all my moving averages on that chart, but let me pop it in there right there. And it's almost like that 20-period moving average is threatening it, and so it's running away. You can see a little selling pressure into that. And you can actually see the tops of the candles getting much closer together. That's a really good sign that you've lost momentum in that little upward rally. And so let me highlight that because I think that's really, really noteworthy right there. Where, that first candle up was really quite monstrous. And then the second candle up, you put a good distance between the tops of those two. Then the third candle up, smaller distance, still showed some signs of strength, but not as much momentum to the upside. And then, that last candle barely eked out a newer high. And so that's a loss of momentum. When you look at that down on an intraday chart, you can see, let me get back to like 30 minutes or so, you can see where the distance between the peaks is actually decreasing a bit. And then the selling cycle is coming in pretty solid. So it'll be interesting to see if this ends up leading to a bigger sell-off, or if you see this more as a bullish retracement on the intraday chart and the bulls take charge and you see it rally into the close, or if you see it break down and give up more ground here on the daily chart. And probably where do you think the next support zone is? Back down here towards the 9-period moving average and the old candle highs back here. So there's plenty of room for it to drop, and I can see this going either way. But because it's a Friday, I suspect you'll see the anybody who was bullish this week taking a profit because they don't want to carry over the weekend.
Mark, there's a really interesting pattern developing here. It's the bearish retracement, obviously, that we've seen so many times, but also on the intraday, you've got a little bit of a compression situation going on. Noah, if you can go down to an hourly chart, Mark, you were showing us some of the stuff that you're watching right now as we're heading into the weekend. Explain that to everybody out there, what you're seeing on the hourly chart.
This is what you call a pinch, where you have, it's a compression pattern. Now, a compression pattern can form whenever you have a support and resistance area where a price is going between support and resistance. And in moving averages, where you have downsloping moving averages and you have a rising moving average, so we have a downsloping 9 and a rising 50, this forms what Frank and I coined many, many years ago as a pinch, where price will go back and forth, back and forth, back and forth. And whoever wins the pinch can oftentimes dictate the terms of the short-term action. And the short-term action can be pretty violent when those pinches get broken. And so normally we look at these patterns on a daily chart because price is moving. Like if you were pretending this was a daily chart, you'd be like, all right, got short-term uptrend. Now we're having a little bit of a sell-off, and now you're compressing. And whoever wins that battle oftentimes dictates the following candlesticks.
Mm-hmm. Frank, in situations like this, do you just wait to see who does win? Do you speculate in advance? Do you have any kind of bias based on your history, your data, watching markets? Do you think it's going to go one way or the other? How do you approach this?
A really good question. And it doesn't close until it closes. And so what I want to do is be very open to either side. I do like the idea of, either literally or at least mentally kind of prepping, okay, if this breaks to the downside, what would that look like? Where is that next spot? Looking at where we're at right now, that 2405 is jumping out pretty good at the 200 hourly, which I'm betting is lining up pretty close with the daily 9, give or take as well. So kind of visualize the space to the downside. And on the other side of it, if we do break into the upside, where's my next level of resistance or my next challenge points? Do I have room to work with? What Mark, likes to call clear air. What do I have to work with? So I'm open to both sides. I try my best to always visualize what it looks like before it happens. The break to the upside, that wouldn't be as tempting to me because I don't see as much upside. And again, that may or may not be correct, but it's a good thought exercise. So that's the way that I will approach that. But I do want to see it break, when we're talking pinches, when we're talking breakouts, it's the same philosophy as far as I'm concerned. You haven't closed until you've closed. And that closing candle is always, going to be the first step, the follow through the second, and therein lies my personal signal.
Back this out to a bigger time frame here, Noah, weekly chart, something like that. So on the intraday, obviously, we're going to be paying attention to how we finish the week here from a technical perspective, but I don't think it matters to me at all. From an overall big picture economic perspective, we had several things happen over the weekend or actually overnight. Consumer sentiment came out this morning at 89, but that data is going to be slow and it's going to be slow to react. I don't think it really matters until we get into April. We've started to see some earnings reports coming in. The House is going to vote on some things, but let's just talk big picture here. We're still dealing with three themes, the Fed response and the stimulus out of the Senate, and then the continued healthcare outbreak. Mark, what do we know about coronavirus right now? Is the data that is going up and up and up and up with more cases coming out, is that a good thing? What is your read on the situation on the health front?
Well, I mean, when you look from a global perspective, you don't have anything good. I wish I could have given you good news. One day I will be able to give you good news. Let's break down from a containment, from a case. You're seeing pockets break out in places that have done a good job with containment. Japan, Hong Kong, Taiwan, places that have been really, really good. You're seeing escalations. They're itty bitty escalations, but they're causing governments to, once again, they thought they had a hold of it, and now they're having to reinstitute orders for social distance, business closings, public area closings in order to fight these mini pockets that build up. So countries that have done a great job by any metric to this point are still having to deal with it from an economic, from a social standpoint. You have an increasing around the world, the trend still continues to more and more closing, border closings, countries requiring individuals to quarantine, countries saying, you just can't come in, sorry, border closings, national lockdowns. That trend is getting worse. The situation in Europe, in Italy, there's been about almost 50 doctors that have died from the coronavirus. I hope we don't have those type of headlines in the United States, but it shows that those frontline medical workers are really, really risking their lives as they fight this. We've had reports of nurses now die from the coronavirus. And remember, we're a couple weeks behind Italy by almost any timeline. You have cases going up in the United States, which on one hand, it's good to identify, but as a society, we're not doing anything to, we are leaving it up to the individual to isolate themselves, You have Connecticut closing roads to New Yorkers. So whether it is from a containment standpoint here in the United States, Vermont just announced they're closing schools for the year. Alabama just ordered all non-essential businesses to close. So all of those trends that we've been following from the healthcare standpoint, there's no good news on that front. Now we can look, and one day there will be good news, but the facts are the facts, and we're seeing more isolation. We're seeing more for lack of a better word, totalitarian measures. We're seeing more trends towards business society being closed down, and cases keep escalating. One day we will have good news on this. Unfortunately, it's not today.
Cody, I want to bring you in on this one as well. Obviously, I mean, what's your read on the situation with COVID-19? You work in a lab where you do testing, and I know you have things you can't talk about, but what's your whole read on the big picture situation?
It's kind of playing out as expected. Now that we have these quicker rapid tests that are starting to come to the market, we're going to have more people testing positive. And I mean, when you really think about it, this thing was unknown to science until December. So in 4 months, being able to create rapid tests, like that's actually really fast when you think about it in terms of science. And when you dump millions and billions of dollars into, you know, these labs to help research it, that's to be expected. So as these rapid tests are coming out, and like the lab I work for, we just put in a huge order for these rapid tests. You're going to see these numbers go up. And what you're also going to start noticing is, because right now with these tests, they're going to be testing people who are symptomatic, who are going to the hospitals. And then once they test, then they're going to test everyone in their family or everyone they've come in contact with. So we are going to see the numbers increase, which was to be expected. But as we do learn more, then eventually, like Mark was saying, there will eventually be good news. Now, to add a little bad news that I just read about 20% of patients that are hospitalized, in addition to this being a respiratory virus, 20% of them are seeing cardiac damage and scarring. So that's not good. So this thing, it looks like it is a respiratory illness, but it does damage other parts of the body, which does make sense why people with pre-existing heart conditions are seeing a greater risk of death as well. So expect the numbers to rise, the number of cases. Now, a positive I can shed is as the denominator rises. So if we look at the death toll, the numerator and the denominator, as the denominator rises, including asymptomatic patients, we should see the actual death toll or percentage decrease. So even as the death toll goes up, the percentage might decrease. So that's a little positive, but then again, we are still losing people. I'm starting to see on, you know, different feeds, people posting about like, hey, these are my grandparents. They both just passed recently. And I think there was a news anchor that her grandfather passed away from this. So you're starting to hear more and more about it. And that really hits the home, because we can't just think of it as a statistic. We have to actually remember that these are people that are suffering and dying from this. So,
which is why our message so consistently has been, until this healthcare situation gets clarity, Matt, you cannot call anything like a bottom. I saw on CBC, NBC today, they were saying, was the market at a bottom at 2174? And I'm just thinking, it's so early to even start having those conversations until we get more clarity on what this healthcare crisis is going to be. Matt, what do you think?
You know, I'd look at this as more of a technical situation when I'm trying to analyze the market. Obviously, we got to be data driven in that, no doubt about that. And our message has been, you know, really since the end of January has been very, very consistent in the sense that, you know, we want to be cautious. We want to be conservative. I remember talking about many, many, many times in the halftime report about how this market was not pricing in the risk to this situation. Our analysis on gold for the last 18 months, but really the last 2 months was, you know, buy gold because of what's going to happen in this type of situation as a hedge, you know, those types of things. But when I'm looking at the market currently, I'm looking at this and I'm trying to focus just purely on the technical condition. And when you're looking at this market, you're really kind of seeing a bearish retracement. Can we all agree with that, guys?
Oh yeah, clean one. Yeah.
Okay. So when you're looking at a bearish retracement, you're really looking at 6 different criteria. If you and students of the STEP system will already know this, but people that have not watched the STEP system, I'm just going to quickly go through them. Number one, and no, I want you to kind of break this down technically and just agree or not. Number one, you got to have a bearish downtrend, which obviously we have lower lows, lower highs. Number two, you got to look at the liquidity of the situation. And when you're looking at the liquidity component of a bearish retracement, you're looking at the volume. You're looking at volume. And if volume on the downward movements in price is higher than the upward movements in price, that gives you a little bit more confidence going into your analysis of a bearish retracement. And what we're seeing here in the downward movements in price, as you can see in Noah's chart here, is you have increasing volume again on the downward movements in price versus a little bit of a decreasing volume on the upward movements in price. So that gives you a little bit of confidence saying, okay, this is just the level of participation in this upward movements in price is not to the same degree as the downward movements in price. And that kind of gives you a little bit of take on the mindset of Wall Street. Number three, you got to have a corrective retracement. And what a corrective retracement is, the difference between a low base, a bearish flag, and a bearish retracement. And typically speaking, on a bearish retracement, you got to have at least 3 days, 3, 4, 5, 6 days coming in upward movements in price that create that bearish retracement. In something like a 1 to 2 day type time frame, you're really looking at as a bear flag. If you're talking about 3 to 5 days into the time frame, you're talking about that as a bearish retracement. Number four, you got to come into some degree of technical catalyst, and that technical catalyst can be one of many things, but you're talking moving averages, you're talking significant whole numbers, you're talking historical levels of support and resistance, you're talking significant whole numbers. And what you're looking at here is in this price movement right that we have seen right now, you're coming smack dab into the 20-day moving average, which is a technical catalyst of support or resistance. Obviously here today it's working as a resistance level, but you're also talking about a 50% Fibonacci retracement level, which in normal times, and I know these are not normal times, that is what we would consider a Goldilocks type retracement level. Number five, you got to have a signal candle. And what a signal candle is, typically some type of smaller candle that hits that technical catalyst that we see slowing momentum, and we're starting to see that today. So you're starting to see that signal candle, and then obviously you have to have a confirmation candle, and the confirmation candle is a close underneath the previous day's low. So we're not going to get confirmation candle today, but you certainly could get that on Sunday coming into the Monday open as well. So I'm seeing this as a pretty prototypical bearish retracement. And even though some of the market participants, i.e. the sectors in the industries might perform differently, but take a look at something like XLE. When you're looking at XLE here, I'm seeing this as a pretty standard bearish retracement coming back in, a nice little 3-4 day rally, slowing momentum, looking for opportunities on the downside. So, you can only do your best guess type scenarios in these environments because the 24-hour news cycle is absolutely ridiculously crazy right now. Yeah. But at the end of the day, I'm seeing this as a technical situation more than anything else.
Which confirmation Monday, Tuesday, Frank, in fact, I know that you're already
very quickly, Tim.
But,
and by the way, this is prototypical bear market type price movements. 11 out of the last 13 recessions had a scenario that we're seeing play out right now. And of the last 11 of 13 scenarios that we've seen in the market dating back to the 1930 market, you've seen this as a bull trap, meaning price typically goes down after this.
Frank, you've got a whole list of candidates, I think, that are in bearish retracements. We're going to look at some of them a little bit later, but when you do your scanning on the weekend, is that what you're seeing across the board, Frank, right now?
Oh, yeah. I mean, it's almost exclusively. I mean, we're in, pretty close to an all or nothing market, meaning it's all green or all red, right? Obviously there are things like Zoom that's defying the expectations and things like that. But across the board and in pretty much every single sector, although I do agree with Matt, this energy retracement is probably my personal favorite space for a bearish retracement right now. It's retracements and it's more and more retracements. There's not really even a lot of breakdowns, to be honest with you.
Well, to kind of throw a little heat on that one, Frankie, even Kramer came out today and said he sees oil underneath $20.
Bring up crude oil. Let's talk about it.
Yeah, it's breaking. It's breaking to the downside.
2160 right now. I mean, we're talking about down 4% here on the day, obviously under some pressure. $20 is a floor here. That's still tradable below 20, don't you think? I mean, that's a clear low base situation, Matt, on a breakdown. Crude oil going lower would obviously be bad for energy companies. We know how bad their situation is right now. Mark, what's your read on crude? Let's get your take on this first.
Well, it's bad. That's why you come to the halftime report to get that stellar analysis. It's not good. Saudi Arabia and Russia, Saudi Arabia through cold water that they were planning on meeting with Russia over anything. This is this is not a knee-jerk reaction from Saudi Arabia. The more time we get the passes, realizes that we're in the end of week 3 now of this. This is likely a strategic move. This is likely a strategic move. Someone has to blink at some point. Someone has to blink at some point. Now, will that be U.S. production dropping off to a level where it has crippled the U.S. energy infrastructure? Does it come to a point where Saudi Arabia or Russia simply cannot take the pain anymore? Someone eventually will blink. Until that happens, though, you also are faced, aside from the price war, ridiculously low demand from a historical standpoint. People aren't flying. They're not driving. Gasoline consumption is not going up despite lower prices. People
Mark,
aren't traveling.
I saw a study today that U.S. gasoline consumption has decreased 40% in the last 2 weeks.
Yeah, I mean, and so you have demand and supply shocks at once. Until one of those alleviates, and perhaps even both, because even if the price war were to magically end, you still are going to have, if they were just producing at levels they were before the price war, you would have a tremendous supply cut. So even if Russia and Saudi Arabia said, hey, we're going to get together, it's all over, you still have a really nightmare situation due to capacity, due to this demand shock that is like being elevated to a ridiculous level. Yeah, I mean, Kramer's saying, you know what, oil's trading at $21.50, and yeah, he can see oil below 20. Yeah, that's a really bold call, Kramer.
Kramer's been watching the halftime report.
Like, that's a really bold call. How about be with us 6 weeks ago when we were screaming at the top of our lungs? This is bad for oil right now, terrible. And it is certainly played out that way. And is there a bottom to oil? You cannot think, at least I don't, this is opinion, someone's going to break. They're going to have to at some point. But do they break at $15? Do they break at $10? Do they break at $8? Well, you know, from a trading standpoint, I don't know.
Even if they do break in the short term, because of the demand, really crisis right now, I don't know if it would hold it up anyway. I mean, sure, a news-driven event could come out and make oil go up $5, $8, $10 if Saudi Arabia and Russia came out and said that. But would you be a buyer on that news, Mark? I mean, in the face of the demand problems globally?
No, oil fits my distressed purchases playbook. The higher oil goes, as long as you have the coronavirus, because we plain and simply do not know when the peak is going to occur, how bad this is going to get at all. Zero. As long as that exists, there is a potential downward pressure in oil. The higher it goes, it's like I was talking in the higher the stock market goes, the higher MGM goes, the higher Delta Airlines goes, the higher oil goes, the less interest I have, because you still have this huge, massive problem facing the economy.
Yeah.
The lower it goes, well, then you can get into speculative positions, bottom feeding style. But no, if it were to rally, absolutely not. I would look for short-term trading situations to the downside.
Matt, some U.S. senators from notable states like Texas, Oklahoma, and the Dakotas were lobbying President Trump last night and this morning to intervene in the situation between Saudi Arabia and Russia. What could Trump do, if anything?
Good luck with that.
Good luck, right?
Yeah,
I mean,
good luck with that.
I don't think that's a fight.
You'd probably have Putin step in and be like, why don't you worry about that whole virus thing you got going on and leave me alone with oil?
What's Trump going to say to Putin and MBS?
Nothing.
Like,
that's why I think they'd kind of laugh him off and be like, go away.
Yeah.
They would have to form a new OPEC.
That's like saying, Tim, if you were having marriage issues, hey, Matt, why don't you intervene in that marriage? There's nothing they can say.
Yeah.
And even if they come out and find some type of agreement where they have cuts instead of increasing the supply, it doesn't fix the demand issue. You can't force the demand. You can force the supply, the supply side economics, but you can't force the demand issue. And so if America intervenes with the the relationship between MBS and Putin and tries to get them to come back to the negotiating table to see oil cuts to stabilize the oil market, would that have a short-term reprieve on the oil markets? Absolutely. The same way when the Fed 3 days ago went full ballistic and trillions upon trillions of dollars, and the government goes full ballistic to the tune of trillions and trillions of dollars, you have this short-term reprieve, but that doesn't cure the underlying problem. It doesn't matter what the monetary stimulus is. It doesn't matter what the fiscal stimulus is if you still are dealing with the underlying healthcare problem. And it doesn't matter in the same capacity. It doesn't matter what President Trump does with Putin or MBS if you still have that underlying problem of tremendous decrease in demand. So to me, oil prices, I've said this for weeks and weeks and weeks and weeks now. To me, the oil debate starts between $15 and $18. That's when the debate starts. It doesn't start right now. I still see decreasing price action here in the energy sector, in the oil market, but I do believe there is going to be a buying opportunity at some point, whether that's 18, 15, whether that's a 12. At that point, you can start saying, okay, I can understand taking on the risk to the short term to invest in the long term, even if the oil market never sees the all-time highs again, which I think probably never will see those all-time highs again. But even if that's not the case, whether oil in 5 years is $30 a barrel or $40 a barrel or $50 a barrel, I think that investment thesis starts when we start to see oil in that $15 range.
Yeah. And by the way,
So
Swin has,
what
hold
I
on.
heard you say, Matt, was profit target 118, profit target 215, and profit target 312.
Hey, listen,
Right?
I'm just applying bearish breakdown scenarios from a technical perspective. But yes, profit target first would be 18. Profit target second would be 15, and that is in conjunction with the break of $20 or $20.50. However you look at that from a technical perspective.
Swin had a funny comment about MBS and Putin. He says, "Send in Dr. Phil," which I
They need
get
it.
behind.
They need marriage counseling. Putin and MBS need marriage counseling.
I actually think maybe a Judge Judy. I would pay money for a Saturday.
No,
Night
Judge
Live
Judy
skit.
would throw fire on that scenario. You got to bring in a Dr. Phil.
Oh God, that'd be too funny. Move on. Let's take a look at the dollar if we can here. Mark, you had some interesting insight into the overnight lending facilities over at the Fed, and Matt, we know this happens all the time. Whenever the Fed starts printing all this money, it really is a free way for Wall Street just to take and make money and make profit. Mark, there were zero bids on what product last night?
On the repo, this whole repo, we're going to have a $500 billion, $1 trillion, infinite repo. Yeah, nobody's bidding it. Because right now, and this is like a big picture that's hard to wrap your head around right now, because the Fed's doing everything, right? They're doing a million things at once. And what effect does that have on bond markets? Well, banks right now, why take the repo, advantage of the repo when you can take advantage of other things the Fed's doing? Like the long-term consequences of the Fed's actions going on right now are they're so mind-boggling. It's hard to wrap your head around them with everything else going on. I would need days and maybe even weeks to theorize and model it out. But the Fed's actions right now are unprecedented. They're just doing things.
They're also extremely foolish.
Mm-hmm.
And how that plays out, your guess is as good as mine. From a big picture, long-term standpoint, they're basically melding the Treasury and the Fed into one right now. And that's not how it's supposed to be. And what are the consequences to that? Jim Rickards has some fascinating things out. Listen, he's hey, nice. It was nice knowing you as the reserve currency of the world, U.S.
We're still very early on that. If you look at that 2 weeks ago, this was the only currency anybody wanted to own. I get it. Fed balance sheet's over $5 trillion, and we have no idea what the long-term impact will be. And Rickards, his books scare me a little bit. They're also very fascinating.
Rickards has also been calling for the death of the dollar for 20 consecutive years.
Yeah.
So
yeah, it's
over the longest time frame, he will be right. but I don't believe the death of the dollar is in the scenario right now.
Yeah. Yeah. This chart, I have no idea how anybody would trade this. Is that a failed breakout right there, guys? I mean, we broke out of the pivot. Now we're back down below it. We couldn't hold 100.
Failed breakout. You saw 3% price appreciation upon the breakout. That's a bullish retracement right now. I know it's crazy technically, but that's what it is.
I don't know what you call it, but it looks like a good time.
I'd agree. Yeah, I hate the dollar. Everybody knows that I hate trading the dollar. But I would agree with Matt. I would call it a retracement, although a little too violent to get
crazy.
too excited about yet, at least.
Yeah.
And can we take a moment to congratulate the Central Bank of the United States for achieving a breakout of $5 trillion on their balance sheet? Can we just take a moment?
Great job, Jerome Powell. You know,
Only we could have gone
a
long
nice
on
golf clap to the Central Bank of the United States. They got $5.3 trillion on their balance sheet right now. And I can't wait to congratulate the Central Bank when they achieve 6 trillion and 7 trillion and 8 trillion. And they're going to throw a tremendous amount of money at this situation in the greatest, economic evolution that we've ever seen from capitalism to modern monetary theory. It's just absolutely fascinating to watch, but that's why everybody should own gold.
Well, and they also came out, and Jerome Powell said yesterday, we have unlimited resources to be able to continue to put liquidity.
Isn't it amazing, Tim, how they have coordinated that message over the last 2 weeks?
Yeah.
That Wall Street and consumer America is like, the Fed doesn't have any bullets. The Fed doesn't have any bullets. The Fed doesn't have any bullets. And the Fed is like, oh, hold my beer. We have a printer.
They're like a video game. They're like the Contra guys. No matter how many you throw out there, there's always more.
So wait, you can just go like up, down, left, right.
There you go, buddy.
Select start. Is that it?
Yes. Well,
That's
select
it.
if you have a friend. If you didn't have a friend, there was no select, Noah.
Oh yeah.
All the gaming nerds are coming out in full force right now.
Yeah.
And I speak as a very, very well-known gaming nerd.
You were
Get
playing
right in.
some games last night, I believe, with your son. I mean,
I was playing
video
Black
games.
Ops Zombies, and I was talking with him and his friends about all this economic and Corona situation. And we got to level 44 on Kino Toten. It was awesome. We had a great time.
It was funny. I woke up this morning, I was drinking coffee. My wife came down. She had a big smile on her face. She says, honey, last night I topped the DPS meters in my raid.
Did she? Oh, that's nice.
Yeah,
That's
yeah.
great to hear.
Yeah, so she
Tim, did you top the DPS meters in your raid yesterday?
I did not. I did
Because
not.
because I did top the healing meters.
Video games are great. And there's no doubt about it. Let's move on. Actually, let's keep talking about markets.
Does that
look
mean
at
we should all
Activision.
buy Activision, by the way?
I was going to say, go put up ATVI. Go look at because when you look at stocks that can do well in any environment, and you could make the theoretical case that people will play more video games and buy more video games in this environment, pay more subscription fees. And going and looking at those naked puts at a lower level. I mean, if you go look at naked puts and be like, what's my potential entry point? Because I always want to get something cheaper. It's just my way. I mean, there's some things on Activision that I don't hate. Throwing that naked put down there at that 47, 50, 45
Right.
level.
And Mark, it's not just the subscription. So many of these games now have cash shops where you can buy that outfit for your character or that mount for your character with real cash dollars. They do it a lot more in the shooter types than the MMO types that we tend to play. But the more people playing, the more times you see that exciting dragon that dude's running around on.
Mhm.
So there's
Frankie, I've said that for a couple of years now, that one of the realities of the situation in the gaming industry is they went to micro-dosing financial transactions, right?
Yep.
Where you basically have these free downloads of all these games, and then you basically don't realize how much money you spend on the $3 transaction, the $5 transaction, the $2 transaction. And historically, you'd go buy a $50, $60 game and that was it. But now you have these free digital downloads, and you basically have these micro-dosing financial transactions. And what the gaming industry has actually found is they can make more money on the same consumer over an extended period of time through this than if they did get that money up front. It was a wonderful transition in the gaming industry, and it really does make me believe that nothing's recessionary proof in an environment like this. Everything goes down, but it's about what recovers faster is really kind of the analysis. And these gaming companies like Activision, they certainly can recover from a revenues perspective, because we just simply don't realize spending that $1, $2, $3, $4, $5 over time. That adds up to $100 to $200 over time.
Yeah,
exactly. And everybody's a walking advertisement in the game, right? You know, that you're the advertisement when you're running around with whatever fancy thing you spent $3 or $4 or $10 for.
Last night, I was sitting there playing Black Ops with my son and a couple of his friends, and the only thing they were talking about was, well, I have to make my character look good. And I'm like, all I care about is killing zombies. What are you guys talking about?
In our day, we didn't care what we looked like.
You know, dress for the job you want to have, right?
By the way.
Hey, will you go to BBW? You know, because like right now because like you can make a stellar case for Activision, and I love that analysis, and I was looking at naked puts while they were talking. You know, it's where do you go? Build-A-Bear just announced that they're going to furlough 90% of their employees. You know, it's, you know, like if you are dabbling in retail stocks, people with retail locations, I know price can seem cheap, but you know, price is cheap for a reason on retail right now. Like, is the government going to come out and say Build-A-Bear? You know, it's not probably high up on their.
My daughter would support that.
You know, but like, there's a lot we're learning. You know, because they furloughed 90% of their employees. They were gracious enough to give them benefits, but no compensation. So they'll at least keep their health care benefits. When we're out bargain shopping, you know, like high up on my list of priorities are things that I believe that the government will save. And if you can't thrive in this environment, like an Activision potentially, like a Zoom most certainly. And share that news, guys, that we're happening news. Just be selective on your bargain bin diving.
Yeah.
Be selective on your bargain bin diving.
Well, and there are some retailers that might be able to hold through this, obviously, and still do well if they have an online model and things like that. But a Build-A-Bear workshop, as much as our kids might love that, and my kids love it too, Matt, I can't imagine the malls are going to be full anytime soon. These companies are going to be under some pressure.
I've been trading for 15 years, and I just learned something new. I didn't know Build-A-Bear was a publicly traded company.
Oh, there you go. See?
Yeah.
I did not know that.
That's why you come to the halftime report every day, to learn these things.
Yep.
There you go, buddy.
By the way, really interesting news out of many, many companies. I want to start with a funny one to me. Bring up Zoom Technologies.
Oh, I was going to say, we've been burying the lead for 35 minutes.
We have.
Yeah, Keith brought it up in the chat a little bit ago. He found the humor in it as well.
Oh my God. I mean, I remember when this thing spiked out there, you know, when the IPO on the real Zoom came out, Matt, the stock rallied like crazy. The SEC suspended trading on this symbol because too many people get confused about what they're actually buying.
Oh my God. What does that tell you about the entire market though?
Mm-hmm.
I mean, seriously.
Seriously. I mean,
the SEC has to suspend trading on a company that the public simply doesn't understand is the correct company.
How many of those orders do you think were coming through Robinhood?
I want to know which member of the SEC accidentally traded Zoom.
So, you know, most days you could have got away with it. It's absolutely insane I mean, while I kind of get how it accidentally happened upon the IPO. I could see how it could happen if you didn't pay attention to anything.
I called it on
a year. Yeah, I know you did. And we're almost a year into that IPO now, and it's still happening. It's just, I mean, how do you not laugh at that?
We're all idiots. We should have seen this 3 weeks ago.
We should have went long fake Zoom. How does it feel to be fake Zoom?
We should have went long fake Zoom, got in at 2, 3
Well,
bucks.
and then shouldn't you have shorted it right afterwards?
You can't short it. You can't short it.
Yeah,
But you could have bought and then sold, right?
Sure. Yeah.
We should have seen that human beings
So our investment thesis needs to start with how ridiculously incompetent and uneducated the American consumer is.
That's a good bet as a general rule, right?
Isn't that economics 101? You're trying to project out consumer behavior. There's no doubt about it. Matt, do you feel bad for anybody who went long fake Zoom and got in at 30?
Of course not.
Fake
Are
Zoom.
you kidding me? No, they deserve what happened.
There's been a lot of crazy stories in my time as a trader. This one might top the charts.
Fake?
Obviously, real Zoom.
Big Zoom leaves bag holders. It just does.
It sure
It's
does.
just
Somebody
insane.
will own that stock forever, Mark. They'll just be staring at it and staring at it and staring at
Yep,
it.
they
in their
turned a day
portfolio.
trade into an investment.
It sure did. It sure did. Moving on to a couple other companies. I want to talk cruise lines here for a minute. Bring up either Royal Caribbean or Carnival. It doesn't matter which one or the other. You know, the House is going to vote on the bill, Matt, at some point. They're going to do some voice call. I've actually heard chatter that there are some members of the Congress that are pushing back on that and are going to want to have a quorum and actually get in there physically and have a vote and a discussion on this bill.
They're going to have their moment where they get up there and talk violently about what they believe in, and they're all going to vote for it because they're cowards.
But here's some news I find very interesting and I actually very much support. Carnival, Royal, and Norwegian Caribbean lines. There's no money in this bill for these companies because they're not incorporated in the U.S. Number one, do you believe it, or are they still going to get a bailout at some point? Matt, what's your read on this situation first?
I said it. What was it? I said it on Monday. These companies should not get bailed out. They're not American companies.
Yep.
They have incorporated in international waters so that they can bypass paying U.S. taxes. No, they should not get bailed out in any capacity.
Yeah. Mark, do you think the government is being very forthright on this? Or are they actually going to come in and give these companies a bailout? What's your read on the situation? Because I know you don't trust much out of anybody's mouth right now coming from Washington, and you shouldn't. So do you believe Mnuchin when he says there's no money for these companies?
No.
You think they'll come in and still give them a package at some point?
Yes.
Why?
Because that's what Steve Mnuchin does. You know, that's what the entire history of crony capitalism over the last 20 years dictates. At some point, they'll make a deal, right? And they'll do it under the guise of, hey, but these companies, they hire tens of thousands of American workers, and they'll come up with some kind of quasi deal in which they'll keep them afloat. No
Yeah.
Guys, we are talking about the United States Congress that just gave themselves a raise in a bailout bill, correct?
Yeah.
Never let a good crisis go to waste.
Yeah,
Confirm
exactly.
that they did that? Because I haven't
Yeah,
read
it's like to the tune of like $25 million combined.
Is it just like, well, any raise, by the way, that's just bad form. Why would they put that in
They
there?
called it an inflation raise.
Cost of inflation adjustment. Guess what? Other people are losing their
Yeah, I was
jobs.
going to say, what about the inflation of everyone else?
It's crazy to me.
That's
By the
infuriating.
way, this whole bill, most of the money is going to corporations, Matt, and yet we're not seeing good corporate news here today. Hilton furloughed most of their employees for 90 days. If you take a look at this, and do we expect all of those people to be hired back just because there's a government bailout? I think so. We also saw GM actually, they cut pay for all of their salary employees by 20%. So much of this money, and maybe the House will push back on this, Matt. Is there any way this drags on and you actually get some resistance out of the House because of the perception of all the money going to corporations? Any risk?
No, Nancy Pelosi has already stated she supports the bill.
Yeah.
Oh, there will be a grandstander or two who will then vote for it.
Exactly. No, there's going to be somebody grandstanding, but at the end of the day, they're going to vote for the bill. And, in my honest opinion, the only thing we're seeing right now is the greatest corporate bailout we've ever seen in human history.
Yeah, I agree.
Remember in 2008 when we used to say that was the greatest corporate bailout in history?
Inflation.
Good times.
And do you trust those corporations are just going to take care of their people and rehire all of their employees? Of course.
Well, the United States Constitution now starts with we the corporation, so we need to trust it, right?
Jesus.
Yes, that's
Yeah.
Ed brought up an interesting question in the chat. Is it too late to short cruise lines? And it kind of had something I want to talk a little bit. And when you look at Norwegian, Royal, and CCL, one stands out to me. So you got, CCL, so it doesn't really matter the order that
What's
you want.
Norwegian symbol? I don't know that one.
NCLH.
NCLH.
So
also pretty.
So also pretty. And then you got RCL, which is Royal. Same deal. And then you got CCL, which we were looking at a little bit earlier. All of them showing that downward movement, all of them in the same space. So the thesis is, if you're interested in shorting cruise lines, you're probably interested in shorting a cruise line, right? And so the decision that we definitely don't want to ignore is the risk to reward side of it, right? And thinking from a swing trading perspective, would it be safe to say, guys, that if I were to tell you I'm short CCL right now or any of them, as a swing trader, my stop would be above that high from yesterday, these recent swing highs?
Yeah, the pivot for sure.
Yeah, absolutely. It
mhm.
would be where it is. And so, I've already done this. CCL gives us a much more favorable risk profile going from where we are to our recent bottom, which is where personally I prefer to target for my first target price.
The amazing thing, Frankie, is that the fact that you put a stop loss above that recent high, you're taking about $5 of risk there, right?
Mhm.
And you still have a positive risk to return profile, correct?
Exactly. And it's a lot.
That is amazing to me.
It's impressive. It's a lot shakier on Norwegian and Royal right now because they've seen more price moving to the downside and their resistance is just a little further away. And so,
Is that
sometimes
earnings confirmed though? Like earnings right there, but on that blue circle. Noah?
Let me check.
What's that?
Earnings data.
Yeah, that's honesty.
Yeah. So I actually still like RCL because of that. I mean, I don't know exactly if it doesn't have a confirmed date and they've pushed earnings or something like that, Carnival would be a better pattern. There's no doubt about it. And I love the point, Frank. You got to put a stop loss on any trade that you're going to take, obviously. And these bear retracement setups, whether it's today, next week, or at some point, guys, we're getting clear technical patterns. There are so many companies across the board that you're going to find this pattern in. And that pivot point analysis where you put that stop loss, Frank, I think in this situation, going to the pivot is the most appropriate thing come from a philosophical perspective. Frank, do you agree with
Well,
that?
I think that can be debated though, because take a look at RCL real quick.
Mm-hmm.
That catch up for you guys yet?
Mm-hmm.
Yep.
It did me. If you take a look at RCL, it's near impossible to put a stop loss above the recent pivot because you're just taking too much risk there. But if you'll break that down into an intraday perspective, and when we're in the scatter report meeting and we're determining where to place the stop losses, it's not just on the daily charts that we're looking at. It's really kind of looking at intraday charts as well. So if you look at at a 30-minute chart here on RCL, like I said, I mean, shorting underneath the low today, you're looking at shorting underneath somewhere around 33.50. It is impossible to put a stop loss above $50 in this capacity because you're just taking on too much risk.
Mm-hmm.
But if you'll break that down from an intraday perspective, you'll look at a potential stop loss placement. Let's see. Let's go to a 30-minute chart if you don't mind. Yep. You have potential support and resistance areas from an intraday perspective right above, in my opinion, either 38 or potentially 40 that you would put a stop loss above. So on some of these charts, because of the volatility is so expanded, sometimes you got to break that down from an intraday perspective to find an intraday support or resistance zone that you're comfortable putting a stop loss above.
Yeah,
I've been using a lot of trailing stops, Matt, in this situation.
Can you talk about that with some detail, Noah?
Yeah, because when you look at like the distance, so I kind of get what you're saying, Matt. Like, yeah, you could use a stop loss out at the pivot, but you'd have to use a pretty small position size to control the risk. And so if you wanted to have a reasonable position size and, still have a manageable risk, I'll go look at things like the ATR, and then I'll, try to figure out what the expected move is. Then I'll use a trailing stop. And depending on the time frame I'm trading, like if I was breaking it down into 15 or a 30-minute chart, I'd get down there and say, okay, well, the ATR on the 30-minute chart's 219. I'll usually double that, and I'll say, okay, I'm going to use a $4 and round it up a bit, $4.50 trail stop, and then I'll use an automatic trail stop that chases the price down as it breaks down and reduces your risk and reward for every penny it ticks lower. Every time it establishes a new penny lower, it reduces your risk by a penny. And then if it runs back up, the stop loss stays in place. And so trailing stops I've found to be very effective. You do get kicked out, but with this volatility, if it moves in the right direction, even for a little bit, it reduces your risk really quickly out of the gates while hopefully getting you into something that's running.
Mm-hmm.
Well, when you look at the market, everything's momentum based right now, correct?
Yeah, everything's momentum based. And so for momentum trading, I liked auto trail stops. And then, under normal market conditions, I prefer using a manual adjusted trail stop.
Mm-hmm.
But with this kind of volatility and movement, the auto trail stop, because I feel like I can't step away from my computer once I start a day trade unless I'm using an auto trail stop. Then I feel like I'm not, trapped in front of my computer.
Yeah, in a normal market condition, I prefer manual adjustments of stop losses. But when you're momentum trading, and this can be said in this market condition, but it can also be said when you're trading breakouts with momentum or earnings reports on the price momentum, manually adjusted stop losses aren't necessarily as powerful as something like a trailing stop, which will automatically trail the price. So wonderful suggestion, Noah. Thank you for that.
I love it.
For
I love
sure.
it.
And really interesting, arguments on both sides. I think both have merit. I think personally, all things, considered, I'd rather use a pivot for but that's only one part of the equation, as Matt has went through and explained. And so, am I willing to, give up some of that extra, holding me down, right? The pivot's a lot stronger than that intraday resistance. I think we'd all agree with that, but it costs me a lot more. If it costs me a little more, I'm happy to pay it. If it costs me a lot more, and that's why, for me, that's probably the primary reason why I don't like swing trading in this environment. That's what I naturally want to do. You guys know me, I'm fairly, I like to give things room, and the risk reward isn't there. So as far as I'm concerned, it's not a good trade, regardless of what else is going on.
Happy Friday.
Hey, Gino made it.
Hey, Gino.
Yeah, I'm 3 cappuccinos, book called Cappuccinos deep into Friday.
A cappuccino's got a little extra something in it.
I'll tell you what, and that little extra something's called nutmeg and cinnamon. And a little bit echinacea, golden seal root, whatever it takes to beat this corona. Hey, I'm a bringer of good news. I just posted in the YouTube link. You guys out there in Utah, I hope this is a trend. I just put the Utah Jazz cleared. They're back to they're cleared.
Oh, really?
Yeah.
Oh, yeah. Gobert and Mitchell.
We got one team out there playing. One team's out there playing. Who's next?
That's awesome.
That's good.
So
to hear.
Gobert and
the Lakers.
Spida, yeah.
Well, let's not talk about Gurley either, guys. Let's not talk about Gurley on the Rams. And
Speaking of basketball, Gino, and I'll throw this out there to everybody. I actually had a thought here today. This whole market rally feels like a big head fake. Who had the best head and ball fake in the history of basketball?
Oh,
Matt, can you think of anybody?
Okay, greatest crossover was Allen Iverson.
Allen Iverson, that's what I was going to say.
Yeah, the greatest crossover was Allen Iverson, no doubt about that. And there's no debate on that one.
Dude, there's a tiny debate. I agree, but Tim Hardaway.
I was going to say you're going to give me Tim Hardaway.
The UTEP two-step was pretty sick. So
it was good. Tim Hardaway's top 3, in my opinion, no doubt. But Allen Iverson just was.
Yeah, the answer. The answer is the answer.
I was watching. I remember one time it was the NBA Finals, and he did this crossover and this step over some Laker, and it was just iconic. I loved watching Allen Iverson play basketball. But that fake though, that's a different conversation though.
I remember Karl Malone had a great head and ball fake, actually.
Larry Bird had the best head fake of all time.
Yeah.
Because that's all he had.
Ime has a good call. Paul Pierce actually had a great one as well. No doubt about it. Oh my.
Yeah. They said that, these athletes are very healthy, right? They're staying in shape all year long, especially the basketball players. And that just kind of gives you a sign that a lot of people had it or over it. I'm hoping to see a lot of that people that probably wouldn't have got tested if they weren't celebrities or athletes. Mm-hmm. They had it. And he said his symptoms were loss of taste and smell. Not too bad. You know what I mean? So it's like they're all cleared after 15 days. Makes you wonder, should I just go out there and get it and be done with it so I can go out and shop?
You go first, bro.
No, let's not do that.
Just so I can go shop.
It will be more encouraging news the more we hear about people actually getting through the whole thing and then getting out ahead. There's no doubt about it, which is why we want data. We want testing. That's great news. I do love you popping in with the cappuccino there. Obviously, you have had 3 of those. I do like that phrase as well. It's going to stick, my friend. A couple more companies for me, and then we can wrap about whatever we want to here, guys. Boeing, very interesting. I know we talk about this company so much. They actually came out and said that they don't want the government money.
Do they deserve it?
No, they don't deserve it.
Right. They don't deserve it.
You weren't going to get it anyway. So they're just saying, well, I broke up with you first. Like, that's all it's really doing.
Wouldn't you think this would be good news?
But guys, is Boeing just negotiating with the government on this?
Probably. Posturing.
Nah, we don't want it. Nah.
Listen, I have a
okay,
philosophy.
if we're gonna
Don't
make it-
trust what Boeing says is my philosophy.
I think that's a wise philosophy there.
Mark, is Boeing going to take a bailout?
Of course they are.
Yeah. So why are they saying this?
Because they're negging him.
Because beggars,
Negging.
because we live in crony capitalism and beggars can be choosers, and cruise lines and Boeing and whoever else they want. Basically, we have no political will.
Well,
Washington.
Mark, it's kind of like dating, right? Like, if you play hard to get, they sometimes want you.
That's what they're doing.
Like,
So yeah.
They're like,
If
really?
Boeing
Us?
is
We're the-
saying
Nah,
that, though,
really?
if Boeing is saying that, the government should be like, okay, not for you then. Of
Breaking news: the House just passed the bill.
course they did.
Just now?
I expected some more grandstanding, but that was quick.
I know, Matt, that's what the government should do. But when you go to flirt with a girl and she doesn't look interested, you want that girl to be interested in you. You want the girl to be interested in you. And so you try even harder.
Mhm.
You know?
I think Boeing is just acting
So-
like, really? You're joking, right? You
So
really
we're
want to give us
suggesting
some?
the government is trying to beg people to take money.
Yes, I guess.
I'll take it.
They're the government. We're here
Oh
to help.
God, I love this version of capitalism. It's so amazing.
Well, if they don't want it, should they give it to Royal Caribbean and Norwegian?
No, they should
They don't
not.
get it because they're not American companies.
Skirting taxes for years. I mean, that's what they
I
get.
just
you
want
know?
to remind everybody of the U.S. government bailing out the European banking system in 2011.
Yeah.
Mhm.
That's going to happen again.
It's going to happen again.
Yeah.
Here we go.
So many other companies we could look at here, guys. What's on your mind as we head into the weekend? Frank, I know you got a couple of.
I got a couple, and interesting. Apple has announced that they've got a COVID-19 website and app that they've got in partnership with the CDC and the White House. So, not really something to think about from a stock perspective, maybe, but certainly an interesting tidbit of news for sure.
Mhm.
We really talked a lot about retracements, and that's really what we're seeing, in large quantities right now. And everybody's going to have their favorites. My thoughts and advice are always to make sure you're factoring the risk to reward. I've done it. I've watched traders do it for years. We get so zeroed in on the entry, right? I don't want to miss that entry, that we don't factor in the risk to reward. And that's a big no-no as a trader, right? So make sure, as you're prepping your trade, whether they're bearish retracements or not, maybe you think this is the bottom and you're buying, still need a good risk to reward, right? So make sure that you are spending the necessary time to be really thinking about that. That really matters as a trader a lot.
Mhm.
And also
Yep.
on Apple, don't forget, they announced that they're talking about delaying their iPhone 12 series, which was meant to ship in September. They're thinking about pushing it back a few months, and that's not good for Apple. That's the 5G one, the 5G launch.
No, I think they came out and basically said that they're already hinting at it. They're going to do that, Gino. They're
They
going to
have
delay
to.
that
They
launch.
have to
Yeah.
production stuff. So that's kind of a bummer for Apple. They'll still make money on it. They'll still sell millions of them. It's just not as soon as they wanted, like a lot of companies. And that's like the major part of their business. They have to launch a new phone. That 5G has been long awaited for.
Mhm.
Mhm.
But what's
Matt-
nice, guys, is hey, that just less months until we have to buy our kids one, right?
I got that going.
Matt, the market's not reacting to the bill, this bill being passed. Obviously, I think nobody really knows what to think about us heading into this weekend. Don't you think
Well, I
a lot
don't
of
think
traders?
anybody in the market expected the House not to pass the bill, though. I mean,
Yeah.
like I said yesterday, there's going to be grandstanding and there's going to be debate and discussion, negotiation. But at the end of the day, Mark made a wonderful point yesterday when we were just talking individually. He said, this is kind of like the war in Iraq bill, right? When we declared war on Afghanistan and Iraq back in 2002, 2003, and hardly anybody voted against the bill. Your boy Bernie did, but nobody wants to be on the opposite side of this historically. And so when you had 96 people vote 96-0 at the Senate, the House was not going to, be like, no, because just the political fallout from that would be historic. But so I'm not surprised the House passed it. I said earlier today, it's going to happen.
Well,
What's
isn't it this kind of priced in already?
Yeah, I think so. What's one thing you guys are going to work on over the weekend, with family, with friends, in a positive way to keep your mind in a good place? Mark, I saw your email today about how much you love music, and you put a playlist out there on the Tackle today. Mark, what's one thing you're going to do this weekend?
It's all work for me this weekend. I mean, there's so much going on during the week. It's about prepping for the week. Along those lines, I'm going to have my commodities report live tomorrow morning, and then going to hold a prep class, Mind of a Trader prep class, where we just prep the week ahead. What are the economic reports coming out? What are the different scenarios that can play out this week? Just prepping the class, holding that at 6 o'clock Eastern for pro members, Mind of a Trader. Just going to prep. Something you do anyways. We're just going to all do it together. Just prep the week. What are you thinking? What are you doing? What are you looking for this week? Just a nice little prep class. So, and then listen to music in the background the entire time.
There you go. I like it.
Because music, I mean, we all have that thing that keeps us sane. For a lot of people's video games, for me, it's music. You got to have that thing that keeps you sane and balanced in this. So
Your playlist was definitely, showed your age. I got to tell you.
Because Mark and I, well, I don't know, you're not that much older than me, but boy, we have different tastes in music.
So,
What a dance with
I
somebody.
didn't see this. What was on his music list?
Oh,
dude,
no,
I like fun, upbeat music. I like fun. I like snappy. I like, lift your
Village
spirits.
People.
Bee Gees?
No, some good stuff.
What are we talking about?
No,
Aretha Franklin, Gloria Gaynor, Neil Diamond, Outkast, Hey Ya, the Village People, Prince, which is Mark's
Wow,
favorite.
those are
Dude,
really
when you get
upbeat.
YMCA
That's
going,
a
you gotta
wide
stand
range.
The Commodores, Brick House. There's a great song. Wild Cherry.
There's some good songs in there.
Play
for
that
sure.
funky music. I'll listen to this playlist for
There's
sure.
some good songs in there.
It's
It's
fun.
definitely-
It's snappy. It's happy.
Yeah, it's
Like
happy music.
I don't need sad country music. There are a couple country songs on there, Big and Rich.
Mhm.
What was
Well, you
it?
did have Garth Brooks, Friends in Low Places.
But that's a fun song when you listen to it. It's fun.
It's a good
like-
karaoke song.
That is
Yeah.
a fun song.
I got friends in low place.
I think this sounds like an announcement that we're holding a karaoke session
We
tonight.
should do that. We
Sounds
should
like it.
absolutely have
I
some
need
fun.
to karaoke so bad it hurts, but
Who at Tackle Trading wants a karaoke trading educational webinar in their future?
like
I don't know.
I do.
This one will not be recorded. I'll just say that.
No, we have to invite the whole team so we can kind of sit back and enjoy the show.
Yeah.
You got to do it at a time on a Friday night or a Saturday night where we all can get drunk.
Only
get
women in trading get away with that, though.
No. We might not get away with it, but that's what we'd do.
We'll be serving cappuccinos. Come on.
Frankie, what do you got for the weekend? What's on the docket for you? young man?
Well, there will be some prepping. There will be some yard working. There will be watching Tiger King. I'm excited to start the Tiger King show on Netflix, but I will be doing a fair amount of yard work because that is the time of year that it's in, and I am one of the people who can do the yard work. So I will be doing some yard work.
Yeah.
So,
Do you guys plant a garden?
yeah.
And it's about that time, isn't it? I mean, we're looking at March. I don't know. I haven't planted a garden since I was a kid.
Yeah,
we weren't good at it when we did it then, anyway. But yeah, that's cool. Yard work sounds actually like a good idea. I got to clean out the garage.
We were good at gardening. What are you talking about? We'd spend 4 hours a day during the summer in our garden, and you're just upset over the tomato incident.
Listen,
Yeah.
I've heard a few stories about Matt and Tim in the garden with Grandma, which we won't get into.
That's for a podcast.
He's
Yeah.
never gotten over the tomato incident. He's never gotten over that.
Uh-huh. Well, I was
Tell you what,
traumatized.
man.
And
I
what
hear
were
people
you,
say, Clean the
8?
garage. Clean the
Gee-
garage. I heard somebody say that. Who was that?
That's me. You know, I'm going to clean my garage out.
You
for
know what?
sure.
I hear people say that all the time. Yeah, this is the weekend I'm gonna clean the garage. If you
And
don't
they-
get it cleaned during a home lockdown, you ain't ever gonna clean
Listen,
it.
you know they're going to say it next week too, Gino. Cleaning the garage is no fun.
So I got the cure for that, Tim. This is how you clean the garage. You turn it into a man cave. You got to hang up a TV in there with sports as soon as sports goes back on, right? So
I would do that, but the garage is my wife's. She's got all of her stuff in
they
there.
don't call it a man cave. They call it a
Nope, it's hers. Like it's her
She
garage.
shed. She
She's
shed. It's a she shed.
yeah.
Yeah.
So okay, so that's her job then. She cleans that, and then you clean the basement, right, or the
Yeah.
attic.
yeah,
Yeah.
pretty much.
I like it.
We have neither here in California. In fact, some of us don't even have garages.
Well, that's right. Yeah, that's right. Maddie, what are you doing this weekend? Anything fun? Video games with the kids, hanging around, cooking some food?
Oh, I'm still thinking about the tomato throw.
You so badly want to tell the story. You can.
I do so badly because it was the greatest throw in human history.
No.
because you were on the receiving end of the tomato incident.
From 50 yards away, Matt hit me right in the side of the head with a rotten tomato out of the, I think it was Chris who was, you know, able to do that.
No. It was over the corn patch. I couldn't see exactly where you were. You said something mouthing off to me. I grabbed the first thing I could and chucked it at you, which was a rotten tomato, and it smacked you smack right dab in the side of the head. And I looked at that throw and I was just like, yep, that just happened.
Here. There's something here. I'm
Yep,
a
I got the aim.
Now is the time to dial in your Roku TVs too, man. There's a lot of neat things on there. Does anybody have any suggestions on series from Roku or Vudu or any of those that?
You have Netflix, Gino?
Yeah, we have that too, but kind of burned out. I'm looking for something new. What's a new?
Watch Tiger King.
Tiger King.
It's nuts. Like you'll be 10 minutes in and you're hooked.
Watch Tiger King on Netflix.
Hollywood, if Hollywood came out with a show about this, they could not cast it better than the original people. It's fascinating theater.
Yeah, for sure.
I know we started binge watching Office, and there's a lot of series, a couple of shows I don't remember seeing. It was kind of cool because you're like, oh wait a minute, I don't remember seeing this one. And
Oh, you're talking Matt's game there. Matt loves The Office.
That is the funniest thing in the world. I mean, it's just good humor and good enough for kids to even watch, you know. And we actually sat there and watched probably 4 hours straight of The Office.
Dude, I don't know how many episodes are on there, but I think they got like 10 seasons or something like that, don't they? Yeah. And by the way, the market here, as we were watching this pinch develop, the market is winning on the bull side in the short term here for day traders. We'll see how it closes.
You just got filled.
Been a crazy couple of weeks in the market. We will be back on Monday. Great job today, guys. As always,
scouting reports this week, guys. Make sure you always start your weekend with the scouting reports, the tackle trading newsletter. Obviously, we're going to have a lot of discussions later on today regarding those scouting reports and where we're going to rank kind of the market in the face of what we're seeing here. So I look forward to those discussions, and hopefully you guys enjoy the reports this weekend.
I love it. Turn some tunes on, binge watch something, spend some time with family as well. We'll be back as a community here on Monday live for a halftime report. Start with those reports like Matt just talked about. Great job, guys. We are out.
Have a good weekend. Stay safe.